The world's richest governments are currently panic buying gold at a speed we haven't seen in years. They aren't just buying it, they're taking it out of the system entirely. But here's the surprise. Even though the price of gold just crashed, wiping out trillions of dollars in paper wealth, the real whales aren't selling. New institutional research has found that the super rich and central banks are buying gold to hide their wealth from a global crisis, not to make a quick trade. They call it a sticky hedge, which is just fancy talks for I am not selling this, no matter what the price does. By the end of this video, you'll know why the paper market is crashing while physical buyers are hoarding, why the US is tearing up its alliances, and exactly how many tons of gold the government is secretly buying every single month. We have to start with the carnage we just saw in the market. Gold plunged nearly $500 per ounce. 4 trillion was wiped out the value of above ground gold in a matter of hours. Why did this happen? All because one specific entity, the CME Group. The CME is the world's largest commodity exchange, and they decided things were getting too crazy. To stop the volatility, they issued a massive margin hike. They raised the margin, which is the cash down payment you need to trade, by significant amounts, from 8% to 9%. That might sound like a small numbers, but for a trader using leverage, that is a massive increase in their cost of doing business. It forced thousands of speculators to sell their position immediately to cover their debts. That is why the price crashed. But here's the catch. While paper price crashed because traders were forced to sell, the physical buyers didn't blink. This brings us to the most important disconnect in the market right now. The traders are selling, but the owners are buying. For years, central bank buying was steady background noise, averaging about 17 tons per month before 2022. That era is over. According to new data, the 12-month average for central banks buying has exploded to 60 tons per month. That is nearly a 4x increase. Take Poland as the prime example. The National Banks of Poland just announced their plans to increase their reserve to 700 tons. In 2016, they had just about 100 tons. They're multiplying their reserves by 5 in a decade. This move pushes them past countries like the Netherlands to become a top 10 global gold holder. Their governor, Adam Glepinski, was very clear. He said gold is a strategic asset for state security, and selling it is absolutely out of the question. Do you see the difference? The CME traders sold because margin went up 1%. The central banks are buying because they're worried about national survival. They are what you call conviction buyers. This behavior isn't limited to central banks. Major institutional analysts have flagged a new phenomenon called sticky hedges. Usually, when gold hits all-time high, wealthy individuals sell to take a profit. But the research shows this isn't happening this time. High net worth families and private offices are buying physical gold and call options, and they're refusing to sell. Why? Because they're hedging against global macro policy risks. In plain English, they're terrified of government debts and war. Because they view gold as insurance rather than a trade, they don't care if gold dips $500 in a day. They aren't selling. This removes supply from the market effectively forever, creating a floor under the price that didn't exist before. Why are these hedges so sticky? Because the geopolitical image is suggesting that the US is withdrawing from the global order it built. Look at the situation in Greenland. It has turned into a full-blown diplomatic crisis. The US has threatened 10% tariff on its closest allies, the UK, France, and Germany, because they rejected a proposal for the US to buy Greenland. And those tariffs are set to jump to 25% by June. The US claims it needs the island for its Golden Dome missile defense project to counter Russia and China, but Europe is fighting back. In a historical move, France just became the first EU country to open a consulate in Nuuk, Greenland's capital. This is a diplomatic power play, planting the flag in the territory to show they won't be bullied. At the same time, the US is engaging in high-stakes secret negotiation with Iran in Muscat, Oman, after sending a military armada to the region and threatening total obliteration following Iranian missile tests. The US is trying to cut a deal, but the trust is gone. Iran has deployed its new Khorramshahr 4 ballistic missiles, and Iranian gunboats are harassing US oil tankers. The US is fighting with its enemies in the Middle East and threatening its friends in Europe. When the global policeman starts taxing his deputies, the wealthy runs to gold. Finally, we have to look at Russia, because there's a perfect example of why this sticky hedge matters. Russia's central bank just announced their gold reserves surpassed $400 billion for the first time. They're hoarding hard assets. But simultaneously, the Russian Ministry of Finance has sold 71% of the gold in its National Wealth Fund over the last 3 years. Why? Because oil prices crashed to $39 a barrel, and they need cash to fund the war. The central bank holds gold for survival, and the government sells the gold only when it's desperate. So look past the red numbers on your screens today. Yes, the market crashed because the CME hiked margins and forced traders to sell. That is a short-term liquidity event. It's painful, but that's just the mechanics. The real story is what is happening beneath the surface. You have central banks buying 60 tons a month, a rate we haven't seen in modern history. You have the US threatening economic warfare on its own NATO allies over Greenland. And you have private investors treating gold not as a stock to trade, but as an insurance against a system that is breaking down. The paper price may fluctuate, but the physical metal is moving from weak hands to strong hands. The smart money isn't looking at the margin call, they're looking at the exit. I hope you enjoyed this story. My goal is to hunt down the newest trend in macro, AI, and tech to find the signal in the noise. If you want boring market information turned into interesting stories, just like this one, consider subscribing. And as always, thank you for watching, and I hope to see you in the next one.